Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, May 17th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Here is a look at the daily time frame here of the ES. You'll notice right here the ES is trading still within the very narrow range here. This is now 8 days developing. 1, 2, 3, 4, 5, 6, 7, 8 days developing here. This is also chopping around the 41.37 level. That level right there is this golden line. That is the dead center of the impulse move. So you had the strong low, rallied to the strong high, pulled back to the 41.37. That became the new key range. One test at the edge brought us back to that level, and it's been there ever since in a neutral position here, which means it is building tremendous energy. Additionally, this also looks like an old school diamond shaped pattern here, which can tend to be quite bearish at some point down the road. Any failure up here or failed new highs could lead to a lower high that leads to perhaps a downside break. Typically speaking, you'll come back to the prior pivot low. It's a longer term pattern here. We'll see if that plays out in that manner, but for the most part, 8 days developing here, that is a 150 to 165 point potential move up ahead. You'll see right down here on an 8-day basis, 153 points. We could easily be looking at a 150 point move out of this range, which could take us right back down toward the 39.75 zone. And again, depending on how much movement we get here, we could get even beyond that. So big time compression here. For the day, we are seeing movement back within the range. So an upward bias right now in the near term, with a shot to go test the previous session's high, but mostly back and forth action within the extremes. If you take a look here at the NQ, this one remains bullish. New highs yesterday for the year. Yesterday also hit this pink line right there. That pink line is the previous year's midpoint. So when we began the year, we mentioned that a rejection of the low close here early in the year would open up a return back to the midpoint. That would be a tremendous buy opportunity, and it played out in that manner. Only rejected the close, never tested the low, straight up the entire time, and has now reached that midpoint. So that target has been reached from that perspective. We do have, again, a very clear uptrend. Price continues to hold above the 8-period average. We're just not seeing signs of rejection that would suggest that fading tech right now, fading the NQ specifically here, is a good idea. It continues to see strength. At some point, we may see some reaction or rejection here of these prices, and that could open up a return back down, perhaps as low as 12.8. But again, until that happens right now, this market remains quite bullish. If we take a look here at crude oil, trying to find a strong low here after the recent rejection. This pullback here has pushed price right into that $70 level, and here for the entire week, really, into last week here, this thing has been trying to hold the $70 level. Today, a great reaction of prices below the previous session's low, precisely on the previous year's low. That 70.08 is the previous year's low, big time level here. And we're seeing it now react off of that level overnight, and we're seeing strength here through the previous session's midpoint. 3-day highs, very important. We're likely going to go test those 3-day highs here up ahead, but if it can push through those 3-day highs, it wouldn't be surprising to see this thing make a move for what could be a stop run day type of rally, and perhaps a continuation that takes you toward 74s over the next couple of days. So again, if this can become a higher low here, you're looking for a return back to 74s and a likely push through that level over time into the 76 to 77 zone. Taking a look here at gold futures. Gold right now showing weakness. The previous session here falling late in the day, really. You know, it already had weakness early on, but really late in the day really fell off here and dropped right into the key range low. This key range right here, this is for the month. Got that low, big strong high, pulled back to the mid. That's now given us a new key range, and price has now tested that level, today's low 85.30, this level 85.80, so it has hit that low. The idea was on this high and on the subsequent failed new highs, we were likely making a move to come get 1980. That was the target here. 1980 is kind of the bottom of this range going back. The key range low here is 85.80. Of course, we've gotten that one, but until we kind of get 1980 here, we could still see a little bit more downside perhaps. Depends on how strong this rejection becomes. Overall, the idea is to watch for price to push between 60 and 80. Look for some signs of rejection, which could take you back up within the range. Right now, the range spans from 2060 down to about 1980. And if we get a little bit on either side, it could be a fade opportunity. All right, lastly, looking at the YM. The YM here, very strong in overnight and pre-market trading. Recent selling pressure here. This is the sell-off from yesterday, especially late in the day, and really throughout the session. Very clear trend day structure, closing near lows. Each of these other kind of times here, after some selling pressure, when we've closed below lows, we've made a move back to the midpoint by the RTH open, and that could be an indication of a surprise squeeze to come, like we've seen each of the last couple of weeks, and that could take us right back up toward 33,350 to 33,370. So a return back up toward these highs. Overall, this market could see a rejection here at this midpoint, which would keep prices going down. But again, given the overnight strength and how bullish the return back to this midpoint is, you're going to see some strength at the early open that could take us through that mid and into those upper targets. A failure to find acceptance above that midpoint, though, that midpoint being 33,215, could open up, perhaps an inverted check mark day down. That would be quite weak. And the key level to watch in that case here is going to be 33K. 33,000 is the big time level there. That's the level that opened up the upside to the current prices we're at now. After we gave it up here, pulled back, pushed back above it here, rejected, came back to it, bounced, now we're back to it again. So this is the big time market structure edge, at least for the near term price action. A failure here and you open up a move back into the bottom market structure. Ideally, you see a rejection here and maybe work back up within the range. So we'll see how this plays off the 33K level. All right, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.